What's good, YouTube? Welcome back to another video, and today we are going to talk about moving averages, actually EMAs. If you don't know what that is, stay tuned. By the end of this video you will know how to trade with a specific strategy, a winning strategy that I use to make sure I get the best entries and the best exits and also have crazy profits. So other than that, guys, make sure you guys subscribe. Road to 1K is still active. So make sure you go subscribe. 2024 hasn't started yet, so make sure you go subscribe because the goal is by 2024 we hit 1K. So make sure you do. Other than that, make sure you check out my Instagram. We are doing crazy videos on Instagram as well. I do reels. I do basically market analysis every single week. So don't miss out on that as well. You get to see exactly what trade I'm in. I show you profits. It's very, very transparent. So make sure you go check out my Instagram as well. And if you want to have a conversation with me, you can always DM me as well. Other than that, guys, make sure you like this video if you haven't already, and let's get straight into the video. So we are going to talk about moving averages. Now, what is a moving average? Now, I trade EMAs, so I'm going to explain to you what the EMA is. This is personally my strategy on how to use EMAs, but before we get into that, I'm going to explain to you what an EMA is. So EMA stands for exponential moving average, and it's basically technical analysis that helps level the price data over a specific period by creating a constantly updated average price. Now let's actually just get the market. So let's say you got this market right here. We've got around, let's say, 50 candlesticks on our page. Okay. Once you have 50 candlesticks on our page, we want to gather an average of these 50 candlesticks. We want to get the average price where it is. So what price does is, because obviously price moves on. So this is actually the 50 EMA. So what that means is every 50 candlesticks that we've got, it plots out an average of price, and then it just connects the dots and makes a nice line for us, which is pretty much smooth enough to trade in. So as you can see, that price keeps bouncing off our EMA. Now this is the 50 EMA. I don't actually use the 50 EMA, but the reason why I'm showing you in this example, because it's very, very easy to identify. If you have a look, when price is below the moving EMAs, we can then identify that it's a downtrend without even doing any market analysis, without doing any technical analysis or drawing, support and resistance or drawing a trend line. We can identify, that price is on a downtrend. And similarly, when price is going upwards and we don't know how to, we can't notice this without, on a naked chart, the EMA just straight away gives us indications that, hey, we are on an uptrend because price is above the EMA. So like I said previously, when price is below the EMA, we're on a downtrend. When price is above the EMA, we're on an uptrend. Now, what if price is going sideways, right? What if price is going up and down? And unfortunately, I personally just don't like trading when the market is doing this. If it's moving around my EMA, I personally wouldn't trade. This is not one of the best examples I can show you. This is what I just got from the markets, but there are examples where price is so close to the EMA and you just physically can't trade because it keeps going up and down, up and down. And I'm actually going to show you in the markets as well. But again, if it is going on a sideways market, this is basically like a consolidation, or price just keeps going from point A to B and just keeps going A to B, A to B, and it just doesn't want to move out until you wait for a breakout. So how do I implement this into the market? So let's have a look. So as you can see, we've got the chart on us. This is the live market. It is a weekend, so the market's not moving, but that doesn't matter. We can still look at the market and see how we use the EMA. So I'm actually on the daytime frame just to show you what I use, which EMAs I use to get really, really nice entries and really, really nice exits. Okay, so if you're struggling on entries or exits, or you're just struggling on analyzing the markets, this is a technical tool that you can use, an indicator that you can use to make your trading level get to the next level, basically. Okay, so let me just remove the indicators for a second. So usually when you're on the market, you can see the naked charts. You can see that the market is pretty much, it's plain. We don't really notice what's going on. We can't find entry points. Yes, we can draw, let's say we draw supports and resistance over here, support. We can draw resistance over here. We can draw that, but it doesn't give us the best level of entries. You know, you can see over here multiple times it could have entered, but we want that sniper entry. We want the best entry so that when we enter the market, we can guarantee some profits. Okay, so what do? We go on the indicators tool, and this is why I'll tell you guys what you need to do is you need to search up EMA. As simple as that. It's called the moving average exponential. I don't know why it says it in that way, but in other terms, exponential moving average. Okay, we do that twice. Okay, you're going to do that twice. Now, let's click on the first one, inputs. Now, it naturally generates on 9. You can use 9 if we just have a look at the markets. You can see 9 does work pretty well. Me personally, I played around with 9 and it works. It's give or takes, okay? For me personally, 8 works. It does miracles. And the second one, we're going to do 14. Now, this is for people who are day traders and who are people who are kind of like, I wouldn't say swing traders. Swing traders will use a higher number, but day traders, 8 and 14 is the best. Okay, if you're intraday trader or day trader, 8 or 14 is the best. 8 can also go for more of like the scalpers as well if you're a scalper. Now let's just change the color. Let's make this one red for you guys so that you can actually see it more clearly. So you can see now we've got red as 14 and 8 as blue. Okay, so how are we going to use these two lines to get us better entries? Okay, so number one, this is what I would say step number one is identify a break in the market. Okay, for example, we can see that price was going down over here. Price is going down, the moving average is pretty wide, meaning that there's very strong bearish momentum. Every time moving averages are quite far away from each other, it means strong momentum. Now you can use just one moving average. Let's say we just use the 8. You can use it, but it just doesn't give me that. It doesn't show me that, okay, there's huge momentum over here, and it doesn't show me where the momentum's slowing down. Okay, whereas 2 of them can show me exactly when the momentum starts and the momentum ends, right? So the momentum ends over here. But if you go a few candlesticks before, because obviously the EMA is going to be delayed, if you go a few candlesticks before, we can actually use our candlestick formations and already identify that we are going to see a change in the markets. Why? We see well, the market basically slows down. We see a huge bullish candlestick over here. And then price does another huge bullish candlestick, breaking this structure, breaking this high. So if I just draw this high for you guys, so price created a high. It broke this high over here. If I just zoom in for you guys, so you can actually see the market. If you can see this, so price, the highs over here, price broke these highs. I don't know if you guys can see that quite clearly, but price broke this high. If I just highlight this, right? And then it broke it and then it's retested. And where does it retest? It doesn't retest our support that we have over here, because we have a level of support over here, which is not going to be the best. But let's just say we have a level of support over here. We could be waiting for some sort of support, some sort of retest back to here. But what does it do? It retests our moving average. Okay. What do we then wait for? You can either be very aggressive and place the trade straight away, or you can wait for price to. Okay. So before we actually talk about the breaker structure, let me just go back again. Sorry, I did go a bit too fast for you guys. When we see a bullish candlestick like this, number one, this is very strong broke structure. Number two, it has broken our moving averages. Okay, it has gone above both moving averages. That means we're about to see price go in the other direction. Okay, then we see a retest. When we see a retest, we want to enter. Okay, when we look for entries, we can see that price is respecting not once but twice our moving average. So what am I going to do? I'm going to place a buy. We place a buy at this candlestick. Now we're going to talk about targets later, but let's look at our stop loss, because our stop loss is also very important when it's moving average, because you can actually place very tight stop losses with the moving average strategy and actually get away with it. Now, if you're doing a support and resistance strategy, you know, always below the previous support, makes it more easier for us to control the trade if just in case we do get some drawdown. But with the moving average strategy, you don't need to do that. You can have a really tight stop loss and actually be in control with the market, because if the market does go down, you can just get a better entry with using, just keep using the moving average. So anyways, let's say we do it just below this candlestick here, just below this low where we saw the retest. Where's our targets? Well, that's a very, very good question. Now we can go for our targets of the previous high, so our next level. That's usually what I do. If it's the next level, so if I just go for the high over here, this high over here, this would be my target. Now already you can see this is a crazy, crazy trade, right? A 1 to 10 ratio, almost 1 to 11 ratio, and it kills, it smacks our take profit, okay? Now, as a trader, once you get an entry, now this is why I say moving averages is so important as a trader, because you will get faked out. Now the moving average, EMA, sorry, I keep saying moving average, but the EMA actually helps us get rid of these fake breakouts, because look, price ends up going below the move EMAs, right? It goes below the EMAs, but guess what? If I just remove this trade for a second, guess what happened? EMAs didn't cross over. Over here we saw crossover, right? We could have ended up trading in this area as well if we wanted to. We just got an earlier entry, but we could have entered when the moving EMA crossed over. That's usually the last point. It is a bit delayed, so you might have to enter over here, but still you're getting good crazy profits. Yeah, your stop loss might be a little bit lower, but you'll get crazy profits. Now over here, did EMAs cross over? No. What happens? We end up getting a nice profit. Now if you hold it until the EMA crosses over, you can see the EMA crosses over. If I just make this into a resistance, our EMA crosses over at our resistance point. So it matches really, really well with market structure. Okay, so now let's have a look. Okay, so we've just placed a buy, and we had a really nice profit. Let's go for a sell now. Okay, we're going for a seller's point of view, and bearing in mind we're on the day time frame, so this is, this is crazy trades. I do understand. I personally don't trade in a day time frame, but this works in every single time frame that you use. You can use a 1 minute, 5 minutes, 15 minutes, 1 hour, 2 hours, 4 hours. All of those, I have tested it out. It works. Sometimes you do get played around with fake outs, but if you're using, it depends on the EMAs, but if you're using 8 and 14, it works practically on all all time frames. Okay, and this is why I love using this. Now over here, see, price shows that price has broken the highs, and so much rejection. Price slows down, rejecting the upper hand. We see doji. We then see the inverted hammer, right? And then we see price huge is basically just crashing down, right? What happens next? Price, number one, like we said previously, we see that price breaks our moving average. Not only one of them, but both of them, indicating that price is going to be going down. What happens next? Price then goes and retests. And where does it retest? It retests at our moving average, and it didn't, and it crossed over. So the moving average crossed over. What do? We go for a sell. Now we can be cheeky, and let's say we enter at this candlestick. So let's say we enter just at this candlestick. Now we can be cheeky. So for us, the lows would, the highs would be just above over here, right? Just above over here. So it's a little bit higher stop loss, but we're using the same method we used previously. Now previously it was a bit more tighter, but over here you can see that it is a little bit higher because of the momentum that we've got to go to the downside. But even though it did wick up, you had it was plenty of space for it to go up, go to drawdown, and still be in the trade. Now we can then obviously have two take profits. Take profit 1 at our lows over here, right, and take profit 2 at our lows over here, right. Take profit 1 smash, take profit 2 smash. 1 to 5 ratio, and this one's I think a 1 to 3 ratio. Yeah, 1 to 3 ratio. So it's a brilliant trade. Now, let's say you don't actually have targets, okay? Let's say you can't actually see any targets. How do I get out of the trade if I'm trading moving average, because what if price just ends up going back up? Well, this is why EMA is also really, really good, because you can actually just trail a stop loss. You can actually just hold on to a trade until moving average crossover. So let's say moving average crossover here, we can hold our trade, right? Let's say we go for a sell. We sell over here, forget about the stop loss for a second. And where's our targets? Well, we can hold this trade all the way up to, if I just hold it, so where's the moving average crossover? Moving average crossed over here. So let's just get this trade to where the moving average crossed over. we can gather in, where did the moving average cross up? We can gather in almost 509 pips. A 1 to, obviously this, if we just put our stop loss where we had it before, we can have a 1 to 6 ratio. Now again, this is for traders that actually don't know how to use moving market structure. You're new to the market, you just want to trail in, you just want to use the moving average strategy. This is how simple it can get. Okay, now the reason why I don't always do this is because sometimes, fundamental analysis, sometimes the market can be moving volatile, especially if you're trading gold. I trade, I trade gold, I trade Euro USD, I trade a Euro JPY, a bit more volatile pairs as well, USD JPY. And Euro USD is not as volatile, so you can see how it clearly kind of works really, really well. But when you do get to faster moving pace markets, you'll start to see that price does, let's say when it gets to this level, it does a huge spike up to hit, back all the way up here, hitting our stop loss, which wouldn't be great because you had all this profit to take. So what I normally do is I use market structure and I mix all of this together and build a strategy.